Welcome, everyone, to Benzinga All Access here on Friday morning. It is August 5th. We have an exciting show coming up for you here today. Also, some talk with Aaron Bree, our producer. Before we go ahead and get started, we want to, as always, thank our sponsor for the All Access show, Ticker. We have an intro video explaining what Ticker is and some instructions on how to get started with them. Let's go ahead and roll that now.
What is Ticker? That's right, Ticker with two I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Fantastic. Ticker.com is where you can get involved in there. Producer Aaron Bree, welcome in. How's it going?
Good. Michael Murray, how are you doing this morning?
We're doing well. We're excited. We've got a great company, Todos Medical. They've presented with us before on All Access. Very excited to have Gerald on, as always. But before we get rolling, what's going on in the markets, man? Give us an update.
Yeah, we'll just do a quick market update. So this morning on Friday, the biggest headline this morning people were watching was for that non-farms payroll number. Michael, that number came in way higher than expected. So the expected payrolls to be added were in the 250,000 jobs range. Ended up being 550,000. And you might think, oh, that's great news. More jobs than added, strong economy, the market should be up. No, it was actually the opposite. The markets dipped on that news because it's actually seen as more likely now that the Fed can continue raising rates at a faster pace. So all in all, markets kind of down on that good jobs report. Interesting to see.
Interesting. Yeah, I mean, I thought we were looking forward to a good jobs report. And obviously, I assumed it was going to be kind of a positive impact, but that's not what we're seeing. We actually have a really interesting interview we're going to be doing today with Anne-Marie Bind from the tradingbook.com. She's going to be taking us through that jobs report and also some potential plays in the market after that. So keep an eye out for it. It will be coming out next week. But what other big headlines do we have floating out there this morning? There's a lot kind of up in the air in the markets right now. What are you paying attention to? You're a resident guru. What are you kind of looking at this morning?
I mean, we're kind of rounding out this busy earnings season. Typically on Fridays, you don't have any huge earnings reports. A few before the open today, we did have DraftKings report, which EPS beat expectations. So DraftKings trading up about 12% on the day, was as much as 20% earlier, but DraftKings still up more than 35% in the last 5 days. So I've been watching and trading DraftKings the past week or so. But then looking forward to next week, Michael. Next Wednesday, we will get July's CPI. So that is the next kind of big thing that everyone will be looking forward to. Because right now, like we saw in the overall market today, dipping on the good jobs report, people are still care right now the most about the Fed and what the Fed is going to do, how much the Fed is going to raise rates by. And the CPI will be a big, we'll go into that next week. So if we get a high CPI number, it'll be seen that the Fed will continue having to raise rates at that, 75 basis point rate. If the number comes in lower than expected, maybe the market says, oh, hey, maybe we don't need to keep raising rates this much to fight inflation, and the market does well. So I anticipate the market's kind of just chopping around a couple days until next Wednesday till we get that report, and then that might determine the next directional move we take.
Got it. And there's a headline that I was looking at this morning, a report from Bloomberg about China crossing the Taiwan Strait and sending some ships over there. This geopolitical stuff, are you worried about that at all when you look at the markets, or do you think that's not really going to have an impact? Because China is obviously something that comes up all the time. Is this something we should be paying attention to at all?
Yeah, I mean, I think investors are certainly watching this situation, and if anything does develop between Taiwan and China and obviously the U.S., then that will be something that will certainly impact the markets. I'm more in the camp that I'm not really worried about it until we see something happen. I mean, if you think about the implications of something happening between China and Taiwan and the U.S. getting involved, those are huge implications. At the end of the day, us and China, China's still our biggest trade partner, so it would have to be a kind of a catastrophic fallout there. I'm not worried about that until something happens. So you might hear some increased fear, some risks involved with some different Chinese stocks, this and that. But as of right now, until there's something substantial that happens, I'm not worried about it.
It's reassuring. I like it. Any trades you're looking at? Because another thing we're going to be covering with Anne-Marie Bind later today is potential trades and moves in the market based on what's going on. What kind of trades are you looking at today? Every time you and Zunaid come on, you're trading some kind of puts, some kind of calls. What's on deck for you today? What are you looking at?
I mean, I'm looking at today with the market. I'm looking at the Qs primarily, with the Qs down, almost 1.5% right now, as potentially an opportunity to play a long trade here. I think the short trade has gotten very crowded over the last week or so, where people are thinking, oh, the markets are up, but we're still heading toward a recession. I'm going to buy puts and I'm going to short the market. And then you get things today like a strong jobs report reaffirming maybe we're not heading toward a recession. So I still think there's strength in the market. I still think we've got some room to run till that next downturn we take. So I see today kind of a red day as an opportunity to play the long side, to play that strength. I don't see a day like today, Michael, as, oh, okay, here now the markets are bad again. It's like, no, we're still fine. We're still doing well. It's just, you're not going to be green every single day.
Yeah, you can't be green every single day as much as we'd want to. But those are some good ideas. And like I said, I think the talk with Anne-Marie Bind later, we're going to talk about obviously the report we got this morning and then some of the trade ideas she has as well. But when you're in a period of time like this too, I think we're still kind of in like that quiet period of the summer. A lot of traders, a lot of investors are still out of the office. And obviously a lot of the people that we work with on a daily basis at Benzinga, kind of quiet right now. It's not super active. Some people are still kind of feeling the summer downturn, the summer slow. I think a lot of people are still out of the office, not really paying too much attention to the markets.
Yeah, I think you'd certainly have that going on. And in August, this time of the year, a lot of people on Wall Street in New York are out of town, kind of vacationing, in different places. I will say this year, because of the market environment heading into the summer, just being down 20-30% on the broad indices going, at one point this summer in June, and then, seeing some positive momentum. I do think that will encourage more people to bring some money off the sideline to get into the markets right now, even when maybe in years past around this time, they're not that active.
Totally. Yeah, well, like I said, it'll be interesting to see what happens in the next week. We've obviously got a lot of big news items coming up. All Access is going to start now. We're going to bring on the CEO of Todos Medical, Aaron Bree. We will see you at 11:40. We'll be back to take us right into Benzinga Live.
Beautiful. Let's do it.
All right, we're going to bring on Gerald Commission. He's the CEO of Todos Medical. We've had the pleasure of talking with Gerald several times before. Let's get him on and get moving.
Hey, how are you?
Gerald, doing well. I know you're joining us audio only today, but great to have you on the show. How are you?
I'm doing great, thanks. How are you?
Very good, Gerald. Always a pleasure to have you here. This is one of the several times we've actually been able to have you on All Access. Todos Medical, trading on the OTCQB. TOMDF is the ticker. Gerald, we've got a lot of exciting topics to dive into with you today, but I want to kick things off very briefly. As always, give us a quick introduction to Todos Medical. What is the company all about?
Sure. So Todos Medical started out as a medical diagnostics company with a tremendous AI platform for blood testing for the immune system, specifically focused on cancer, and expanded into Alzheimer's. We acquired a company called Provista Diagnostics and another one called Breakthrough Diagnostics, bringing more traditional technologies forward so that we could then acquire tons of samples and then power that AI to ultimately replace the work that Grail is doing with their test down the line. So we now have, a full service lab called Provista Diagnostics, where we're doing COVID PCR testing. We're doing STI, wound, GI, respiratory, and a few other PCR panels. And we're expanding into Monkey Pox as the next major source of potential revenue because the U.S. needs to expand. So really, it's been all about testing. And really ramping up PCR testing and testing for cancer. And then we developed a joint venture with a 30-year coronavirus researcher out of Israel. And we've come up with two products for the SARS-CoV-2 protease. One is called Tolavid, which is a dietary supplement that's on the market, not approved to diagnose, treat, prevent, or cure COVID. But many, many people are using it within that context of COVID. And now, especially, our big client base is long COVID. And we have a drug candidate, which is an enhanced version of the supplement, where we've now finished phase 2 trials, and we're in an extension phase in preparation for filing of an emergency use authorization for Tolavir in the treatment of hospitalized COVID, and maybe expanding beyond just hospitalized COVID to other areas of COVID. And we think that the drug will also have applications in long COVID. So, full plate of testing and a treatment subsidiary. And it's been, quite busy over the last couple of years as we've built this up.
No, I can imagine. And with the profile of Todos in mind, let's take a quick look at the landscape. I know you mentioned monkeypox earlier. We're definitely going to dive into that being declared a national emergency just a week ago or so. But let's talk a little bit about the landscape that Todos has had to play in for the last couple of years, right? With the COVID pandemic and everything else. We've had multiple conversations in the past about how this has affected the business, how you treated it, how you came through with the PCR testing and everything else. Where do we stand right now here in 2022 in the second half of the year? What does the COVID landscape look like? How is the company reacted? What's the journey been like up until this point through the pandemic?
Well, if there was one thing I could say is that, relying on our political leaders to do the right thing has been a bad move. And we've realized that now. And so actually we're now more focused on the consumers and the physicians who are focused on protecting themselves, because that's really ultimately where the market is right now. That could change based on the political winds, of course. So I would say we're in a dangerous place. We've kind of normalized 100 to 200,000 infections confirmed by PCR on a daily basis. We all already know that that's, maybe 10 to 20% of what's actually out there in terms of ongoing infections. The infections themselves, interestingly, while not killing as many people, seem to be lasting longer. And even with the treatments that are out there, as we're seeing with President Biden, there's significant rebound potential. So these infections are lasting longer, keeping people out of work longer, and long COVID is really taking center stage now as the main problem. People aren't worried about dying of COVID; they're worried about living with long COVID, which is really potentially disastrous. So I would say we're in a pretty dangerous place just on the biology. And then when you couple with that, the policy, just yesterday, CDC released policy, which basically said they don't want people to test in schools. They don't want masks anymore. Even if you're sick, you can kind of still show up and spread the disease. I think we're going to be in for a rude awakening at some point. But there's midterms coming up. And I think that somewhere along the line, some political strategists said, if you keep talking about COVID, you're going to lose. And so right now that seems to be the administration's policy. So, I think it's really up to private business to make the tools available. And I think increasingly, at least in New York, I'm seeing more and more masks everywhere I go. Maybe that's because of monkeypox, but I see that, there's an increasing concerned population that is starting to take extra steps to protect themselves. And that's the market we're going after.
Absolutely. That makes a lot of sense. And we were going to save this for a little bit later in the conversation, but I think it makes sense to discuss it now. The same way you're talking about the scene in New York, we're seeing the same kind of thing here in Detroit where we're based, right? We're starting to see some masks come back. We're starting to see the conversations and the chats come up with safety and protecting yourself. And I think the monkeypox certainly plays into that as well. So give us your take on the monkeypox situation as of now. How has it been handled so far? What's the conversation around it? What's your take on the monkeypox situation as we stand here today?
Well, not to beat up on public health too much, but it's been a disaster. We know that we saw from the early days of COVID, every single lab in the country had to wait for the CDC to develop a test, and that took forever. And while they were taking their sweet time doing that, the virus spread, and that's exactly what happened with monkeypox. I mean, the interesting thing about monkeypox is it's existed for a long time. There are tests, commercial tests that other people are making that have been using for years. And for some reason, unknown to me, we didn't just take those tests and deploy them. We waited 2 months for the CDC to figure out how to do a test. So we missed a huge opportunity to stop the spread. We knew that the virus was really in the gay community primarily. And it's still primarily there, although now, children are getting it, some women are getting it. So this whole notion that it's really just a men having sex with men thing is kind of, it's not true, even though that's where it's been positioned. And so, you combine the lack of available testing, not really a lot of education on the early signs and symptoms to look for, no real plan on isolating people. I even saw something about the CDC saying, if you have monkeypox and you still have to go out, please wear, long sleeves. That's just ridiculous. So it's gotten out of the bag. It's obviously not a huge problem yet. And hopefully, there are drugs, unlike the early days of COVID. There are vaccines, unlike the early days of COVID, not enough vaccines. And so right now we're in the situation where we need to hypervigilance. There's not enough vaccines to get the necessary immunity required to stop the spread. So that's gone. So we're not going to stop the spread. So what we need to do is we need to identify the spread and we need to treat it. Luckily, there are potentially drugs such as TPOXX that are actually in the market and that could work. And so we need to aggressively expand testing, and we need to make sure that as soon as anybody is diagnosed, they get that drug immediately. And we need to start focusing on exposure and contact tracing so that people can get identified earlier, because what we're finding, not just us, but people in Spain, peer-reviewed articles, and now there's a lab in LA that you can actually identify monkeypox in saliva in asymptomatic people that have been exposed. So you can find people who have monkeypox and don't know it, and if they aren't diagnosed yet, and if you encourage those people to get tested before they have symptoms, when they become even more contagious, then you can give them the drug and potentially slow the spread. I think that's the only option we have. And so ramping up testing is absolutely the number one priority for the country if we want to contain monkeypox.
Got it. And you guys are currently developing a test for monkeypox, is that correct?
Well, correct. So, luckily for us, we've spent the last 2 years developing relationships in the PCR testing world. We actually have an entire division that supplies labs with the necessary PCR reagents and materials and supplies needed to do testing. And we have relationships with manufacturers and suppliers that can give us the necessary pieces of the puzzle to put tests together. And so that's what we've done. We went back to our suppliers that are already in the market with commercial monkeypox tests. And we've identified the best in breed, the most sensitive. And we're in the middle of validating that now so that we can deploy it, not just for lesion testing, but as I mentioned, saliva testing, which is going to be, I think, the only way to really get this thing under control. So that's what we're doing. And we know our stuff works because it's not, we're taking stuff that is working elsewhere in the world and deploying it here.
Okay, so let's take that a step further too, right? Certainly when you're talking about, public health pandemics, you never want to look at this from a business standpoint necessarily, but this certainly is your business, is containing and treating and doing things to prevent or at least mitigate the results and the damages of pandemics like this. With the numbers of monkeypox still being relatively low, especially in comparison to the early days of the COVID pandemic, when you look at this in terms of a market opportunity and the tests that you're going to develop in containing this, do you see this continuing to spread in the same virulent way that the COVID pandemic did? Do you see this being able to be contained if we take different steps from a public health perspective? Or do you think it's already, as you said, out of the bag far enough that this is going to continue to spread and continue to become a pandemic?
Well, listen, it's going to continue to spread. But it's not going to spread anywhere near as fast as COVID, right? So let's all make that clear. With that said, at least the visible consequences of monkeypox are dramatically more significant than COVID. So, many people weren't scared of getting COVID. They called it a cold. I don't think anybody's doing that with monkeypox. So the fear factor with monkeypox is more significant, which, by definition means that there's going to be more people at the earliest signs that are going to want to get tested. And when you combine with that, the lethality of it and the areas in which it can be quite significant, there is an opportunity. So, for example, we've seen in many diseases that are looked at in pregnancy that have a very low prevalence in the U.S., but they've become part of a standard panel. If monkeypox continues to spread the kind of way it's spreading, if it gets into children and it gets into areas with young families that have young kids in daycare and maybe pregnant moms at home, we absolutely could see this becoming part of just regular routine prenatal testing. Obviously, as part of the sexually transmitted disease panel type situation, that's clearly the number one way it seems to be spreading, and that's the messaging from public health. So you can imagine it makes a whole lot of sense if you're gonna, if you're a gay person, you're getting an STD test, you you should run a monkeypox test as part of that process. And then obviously you have just the run-of-the-mill risk factors of people who are exposed to people who ultimately end up testing positive with monkeypox. And even if they didn't have a close exposure, right now the biology, everyone's saying, oh, we really know how it spreads. I'm not so sure about that. I'm not so sure because there are case reports now of it spreading, at low levels, of course, but spreading through money, and it's spreading through aerosols and droplets. How long you have to be there, that's a question. But, in the era of masks, that wasn't a concern. Without masks, that's a concern. So I see a lot of opportunity for this, not just kind of a short-term play, but something that, ultimately could be part of routine testing for a number of things to prevent future pandemics. And with regards to kind of that pandemic discussion, it was California, Illinois, and then New York. And now, the federal government has declared an emergency. So for the federal government to do that just a few months before midterms, that kind of tells you they know they've lost control of the situation.
Understood. And I want to stay on the topic of COVID and monkeypox because you kind of drew some comparisons between how it was reacted to in the early days of COVID and how the monkeypox pandemic is being reacted to in the early days here. But if we stay on the topic of COVID, you guys just released the preprint of your chronic long COVID case study. Can you talk a little bit about the findings there and how it may impact how things are handled down the road with monkeypox? Anything significant to look at there?
Sure. So, like I said, the big difference between COVID and monkeypox is, monkeypox is an orthopox, and there are treatments for orthopox. We understand them quite well. With COVID, the number one treatment out there is Paxlovid, and we're seeing what's happening with Biden. It's maybe not so great. So we see that the challenges with monkeypox are identifying cases. Once someone is identified with monkeypox, they take it very seriously. COVID is a different matter. We've kind of been desensitized to it and take it much less seriously. And that's one of the reasons why we do think it's an opportunity for monkeypox because, numbers of COVID testing have been going down. Even though the numbers of testing have been going down, the numbers of people who have COVID has not. And so those numbers are staying stable. With regards to monkeypox, the numbers are only going to go up. Right. And the fear of monkeypox because of the obvious cosmetic nature of it and the lifelong scarring that occurs as a result of it is going to create hypersensitivity among a huge population. So I think that despite, some very clear biological differences, the fact that we have a treatment for monkeypox should really drive everybody into gear because we can stop it. It's possible. COVID, it was basically not possible, but with monkeypox, it is possible. And so that really should be driving, how we're looking at it because we need a robust response now.
Sure. And talking about a robust response, right? You mentioned earlier how the reaction of the public health department has not been up to par, in your opinion. If you were running the public health response and the messaging and the narrative to people about how to handle the monkeypox pandemic, how would you handle that? What would you change about the narrative? What would you tell the populace? How would you handle this if you were the public health department or trying to get people to understand this pandemic in the right light?
Right. So first of all, what I would have done is I would have taken those commercial tests and evaluated them to figure out which ones were the ones that were up to snuff. Right now that's being done by CLIA labs like ours. That has not been done by CDC. CDC kind of did that as a clearinghouse, or NCI did that as a clearinghouse for a lot of those antibody tests that nobody ended up using a couple years ago. That would have been a much better use of resources here. And then I would have identified within each state at least one lab where close to the centers of population where it's spreading in the gay community, where you can get fast turnaround time testing, so that it shouldn't be extraordinary to find a monkeypox test. It should, in fact, be extremely, extremely easy. And given that we have the COVID infrastructure of testing that, despite it's been kind of dismantled somewhat, it still exists. It's the same labs that are doing COVID testing that are going to do monkeypox testing. So, that get the speed with which you can tell people, hey, I can take your COVID test and your monkeypox test all at the same time, get a result and give you an answer in a few hours. That's the key to stopping the spread. In terms of messaging, the spread right now has been primarily among the gay community. So, in conversations that we have with our experts, the gay community is in fact quite responsive with regards to public health because they have a lot of experience with HIV. And so obviously a public health messaging campaign initially targeted there, but not limited towards that, where, you say, look, it's not just, sex with men that can cause this thing. It's touching of skin, it's, doorknobs, etc. So the whole what used to be called COVID theater with regards to hand sanitizer and washing your hands, guess what? That's public health 101. That's what we need to be preaching again here. Because right now that seems to be the ways in which it's spreading, people touching each other. And so, limiting that and washing your hands and, doing hand sanitizer and that kind of stuff when you're at risk is critical. The whole aerosol and droplet, that's a close contact kind of discussion. And I think, it goes right back to communicating with people, getting them fast answers so that they can then, confer with the people that they know to let them know that they were exposed. So, and the reason why I say that is, the monkeypox incubation is anywhere between 14 to 28 days. Usually within 7 to 14 days, you start to show biomarkers, whether those biomarkers are in saliva or for other orthopox viruses in blood. You can find monkeypox IgM most likely in blood in the early stages of the monkeypox. The big fear, of course, is, a lot of people, you may have been exposed, you don't know you have it, so you don't want to tell everybody in the world that you've been engaged with that you were exposed. You want to wait until you have a confirmation. I think that's the missed opportunity, where if you shorten that turnaround time for the tests, you shorten the turnaround time for people telling other people that they've been exposed, that they in fact have a confirmed monkeypox case and that those other people were exposed. That was the failure with COVID. You tell someone, well, I was exposed to COVID. Well, everybody's exposed to COVID almost every day in this country at this point. With monkeypox, getting that answer is much more critical.
Understood. And Gerald, as we wrap really quickly too, obviously we spent the bulk of this conversation around the monkeypox pandemic. As we're moving forward here into the second half of the year and closing out Q3 and Q4, anything else that's coming from Todos Medical in the R&D pipeline or the development pipeline that we should be on the lookout for, especially as you guys are addressing monkeypox?
Sure. Well, with regards to monkeypox, obviously the number one thing is completing the validation and getting the assay up and running in the market. With regards to getting it up and running in the market, I've heard from a lot of investors who've kind of compared us to Applied DNA and their ability to get the tests up and running into the market. And, that I think is a reasonable comparison. They're in New York, and so they have some more bureaucracy to get the tests up and running. Whereas we're in Georgia, and basically as soon as we've done validated, we can offer the tests. We do have our own validation for the state of New York that is happening in the middle of September. And so, I'll be able to offer monkeypox to most of the country much sooner than that, probably, mid to end of September, state of New York, we should be in a position to offer monkeypox testing. So that's, on the monkeypox side, that's the catalysts coming up. On the COVID side, obviously it's quite significant. Number one, we are obviously are in the market selling our Tolavid product around long COVID, primarily as the target market. Obviously, it's not approved to diagnose, treat, prevent, or cure, but that is the market, and people are seeing success. We recently announced an agreement with a company called Amerimmune, where we are jointly have launched a long COVID panel. And what we're finding now is we are actually seeing not just the symptomatic changes that people are reporting with Tolavid, but we're starting to see fundamental biological changes in the biomarkers when people start to take Tolavid, and that I think is critical because that's where a lot of the subjectivity that people try to infer upon long COVID can kind of be down, kind of goes away, and you can't really disagree with T cell changes, B cell changes, and improvements in other aspects of the immune system. So that as we expand the testing, there's the testing revenue around long COVID that we think is just a huge opportunity, because that's the big problem for many long COVID patients. They don't they're not believed because there's not really a lot of tests. And so, we're the first ones really putting together a truly comprehensive long COVID panel to address all the different aspects of long COVID, viral persistence, autoimmunity, cardiovascular. So that, that's an area, and having the testing, of course, will drive sales of Tolovit. Because if people, can get a test for long COVID, can take Tolovit, and then see changes in their biomarkers and feel better, then that's the ultimate that you would want a drug to be able to do. But it's going to take time for drugs to get through the FDA. So if supplements can have that impact, that's great. And if other supplements outside of Tolovit can be used in combination with Tolovit to address some of the biomarker issues, then that would be great also. And we are looking at, adding things beyond just the Tolovit as part of our offering to be able to address that part of the market. So that, that's where we're going with Tolovit and long COVID. And we are seeing now adoption by long COVID clinics. And we're also seeing adoption into formularies by some of these institutes, including the Institute of Functional Medicine. And so we think that, as long COVID is now starting to be treated by a disease because doctors are starting to understand it better. And those doctors are making recommendations of Tolovit. And we think those are going to be our biggest advocates and our biggest sales force because the doctors, they want to see their patients get better. And if their patients get better, they're more likely to get more long COVID patients. So it helps their business. So that's Tolovit. For Tolovir, we have a ongoing phase 2 study. We completed the primary aspects of it, and we disclosed the data. It was obviously very, very positive. Now, what we're doing is we're in an extension phase that we've been putting together, and with 46 patients. But our regulatory people are telling us with an additional 10 patients, we could potentially be in line to get an emergency use authorization of Tolovir, our drug candidate in COVID. And so that's the focus over the next 3 months, get that data submitted to the FDA for an EUA, and then look. It doesn't look like we're going to have to do that phase 3 study, at least not yet for Tolovir. And so that's great. That really reduces the potential cash burn that would come out from having to run that. So, those are, the high level things. And then just from a revenue perspective, we have completed and have launched now our UTI test at our lab Provista. We're almost done with the validations of wound panel, respiratory panel, gastrointestinal panel, and sexually transmitted infection panel. Some of those panels we're actually going to be adding Monkey Pox to make them more relevant, especially STI for the gay community. So we think that that's going to allow additional revenue to be driven through Provista. So it's all about driving revenue to Provista, expanding the offering, and then ultimately getting ready for our breast cancer test Videssa that'll be out in the market next year. We have started recruiting the clinical trial for the deployment of that test. We expect that to be done in the first half of 2023. And then on the 3CL subsidiary side, on the Therapeutics, obviously it's driving Tolovit, working with doctors, proving Tolovit's worth with biomarkers, and then, just getting more publications out there and more marketing to drive sales. And then, completing the necessary recruitment to be able to get the number of patients to submit to the FDA for the EUA for Tolovir, which then obviously could lead to bulk purchases by governments. And that, that's just a massive, massive revenue opportunity. So it's very, very exciting over the next several months here at Todos.
Absolutely. Very interesting conversation. A lot to keep an eye on, too. You brought up quite a few topics here that we'll certainly want to have you back on to discuss in the near future. Gerald Commissiong, CEO of Todos Medical, always a pleasure to have you. Thank you for joining us.
Thank you.
Gerald Commissiong, CEO of Todos Medical. TOMDF is the symbol on the OTCQB. We're going to go ahead and bring back on Aaron Bree. Get him back into the studio. Before we move on to the rest of the shows today at Benzinga, we do have a couple of house cleaning items to clean up. Of course, our sponsor, Ticker, which we will play the video for again. But we also want to mention the giveaway link, Aaron Bree, which completely slipped my mind at the beginning of the show. Every week on All Access, we are doing a $150 giveaway. We're playing around with a couple of different ideas for multiple giveaways that might come next week. We'll see. But there is a link in the description of the YouTube video below under the stream. If you click that and fill out the form in there, you'll be automatically registered, and we will select a winner randomly from registrants. Aaron Bree, would you want to win $150?
I would, Michael. That might, help fund my weekend this weekend.
What? Any big plans? Big weekend coming up?
I don't know if I want 150 free dollars. Maybe I'd go to the casino or something, play some roulette, play some blackjack.
All right.
But yeah, go ahead and hit that link. It should be pinned up in the chat. All you got to do is register through that link, and then you are automatically entered to our contest to win that free $150. How about you, Mike? Any big weekend plans?
No, not really. No, if I won $150, it might be different. But actually, I will call out. It is our producer, our stellar producer, Aaron Thomas's birthday today. He is out of the office. He's celebrating. So I think we're probably gonna do some birthday plans for producer AT.
Hell yeah!
Celebrate him. It's a big day, man. We love Aaron Thomas. A great dude. It's his birthday today. So yeah, we'll get together. We'll do some dinner. We'll celebrate Aaron Thomas. Yeah, that's the weekend right there. That's what we're doing.
Exciting stuff. Yeah, guys. How long do we have to wait to let people fill out this chat before we select the winner?
I think, you know what? Let's do it sometime during the show that you're going to move into after this. We'll give people some time to fill out that link. In the meantime, before we get started on the rest of the show, let's go ahead and play our video from our sponsor, Ticker, who sponsors every single show. As always, we always want to thank the companies that participate in All Access, but our sponsor, Ticker, as well, for being the best stock perks platform out there. So we'll go ahead and roll that intro for Ticker one more time, and then we'll move into the rest of the show.
What is Ticker? That's right, Ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Awesome. Aaron Bree, that concludes All Access. We had one company in today, but you are going to shepherd us on from here, take over the Benzinga live show. We'll see you on the other side, my friend.
Yeah, so typically we would have maybe a different stream or whatnot, but we're just going to go ahead and combine those streams today. We're going to go ahead and run with Benzinga Live on this stream. Let's go ahead and play that intro, Marky.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasek from Trend Spider. We have breaking news.
Alrighty, folks. Hope everyone enjoyed that All Access hosted by Michael Murray. We're going to go ahead and transition into Benzinga Live. Let's start the show with just doing a quick check on the overall markets. Of course, biggest headline today so far has been that payroll number coming in this morning. Your non-farm payrolls coming in higher than expected. You'd think that's good news. The economy is doing well. No, Wall Street said, actually, we don't like that. And I'll tell you exactly why. Of course, it has to do with the Fed and future federal fund rates. But yeah, guys, I mean, I mentioned it earlier on All Access. If I were going to trade this, I think you got to look at how we've been doing, right? Look at this strength. Past 6 weeks has been strong. Today, we got good jobs numbers. You're going to tell me that that's my sign to go ahead and get out of the market? No, I mean, let me go ahead and pull up our Cme Watch Tool. This is from the CME, basically looking at futures markets and weighing the probability of different rate hikes. You can see that we've flipped on probabilities. This is for a 50 basis point hike in September is now 34% and 65%. So they're saying it's now more likely we see another 75. So current rate is 225 to 250. This is to get us up to 300, 325. So another 75 basis point hike. It is now more likely. Yesterday, one day ago on August 4th, it was only 34%. Today, it's 65%. So that's basically saying they're looking at the non-payroll saying, okay, the economy is still good. If people are still hiring, if wages are growing, which there was also wage growth, was the other part of the report that came out this morning, then that is not conclusive to the Fed's goal of limiting inflation. I mean, the Fed hasn't really outright said it, but, if you're inferring, if you're reading between the lines to what Powell and what these guys have been saying, basically saying, we are going to tolerate some level of unemployment rising, some level of layoffs in order to get inflation coming down. That is the Fed's number one goal right now, is getting inflation coming down. With that said, you do have some indications that could be happening, right? We've been checking this website pretty much every day, pretty much, continuing this trend of about 2 cents a day. Yesterday average was basically $4.14. Now it's basically $4.11. So 3 cents cheaper today than it was yesterday on average. And again, I'm basically still checking this every day just to see if that trend, when and if that trend stops, when we have a day where gas doesn't get cheaper, or maybe it even gets more expensive. But as of right now, it looks like at least on gas prices, you have fallen on a daily basis, that is giving investors some hope, some idea that, okay, maybe we do have inflation cooling down finally after basically a year straight of super elevated CPI reports. And even if, we do get inflation coming down in next week's CPI report, it's not going to mean, okay, inflation's gone, we don't have to worry about it. No, it's still going to mean prices are higher than normal, prices are too high for comfort for what most people are paying, but at least it gives investors, because, in investing and trading, when you're looking at the market, it's more about what the future expectations are than what's happened. So that's why if we see inflation coming down, even if it's still 6% year over year and still super high, and we're still paying $4 a gallon and it's not fun, why it might be good news for investors, because they're seeing that, okay, going forward, right, you have multiple bullish impacts of lowering inflation. You have consumer sentiment rising. You have people more willing to spend money. People are less worried about inflation. That's good for the economy. And you also have on the Federal Reserve side, you have the Federal Reserve less likely needing to raise rates at that quick pace if we do have inflation coming down. So with that said, with gas prices continuing to fall, XLE is actually your leader today, up more than 2%. So if we're looking at stocks like Chevron, stocks like XOM, all up, 1-2%. And this is what I've been saying on the oil trade on these stocks. If you think we're not heading toward a recession right now and jobs are going to remain good and people are going to be traveling, you should want to buy these stocks here. You should want to buy ExxonMobil at $88. This thing got all the way up to 106. I'm not saying that's why you should buy it because it's going back to its previous highs. No, because gas prices are still elevated. Even though they're falling, people are still paying $4 a gallon for gas. And we saw that with these companies' earnings reports. You can see here that run up from, Chevron and Exxon both had great reports this quarter because the demand is still there. So this is just a demand question. Do you think the demand is going to remain high? Then you would want to buy these stocks. If you think the demand's going to fall for oil because we're going to see a recession in the next 6 months, next year, then stay away from these stocks. And I know, people are going to say, if we see a recession, Aaron, we're already in a recession. We had 2 negative GDP quarters. That's fine. I'm not going to get into that argument. I don't really care. I don't have the want to have that argument about if, what we saw the past 2 quarters has been a recession, because whether you want to call it one or not, I made this point, a few days ago. If the next quarter is positive and you still want to say, okay, well, now it's not a recession, but that was still a recession, the 2 quarters we saw, I'm not going to think back in 10 years and think, oh my God, you guys remember that terrible recession of 2022 when we were still adding jobs? And no, GDP lagged. Productivity was down. There were a lot of factors, a lot of headwinds, whether you're looking at, Russia and Ukraine, whether you're looking at inflation, whether you're looking at China. I think for all intents and purposes, call it what you want to call it. We've had some headwinds, like I mentioned. We can look at the SPY, but in terms of the overall economy, like we're not, grinding to a halt or seeing, huge swaths of layoffs across the board. I've made this point multiple times on the show, where I'm not really worried about different tech stocks or different growth stocks laying people off. I'm going to be more worried when Walmart and whoever are laying people off. Now we got that. We got that this week where Walmart announced it's laying some people off. And that was a headline I certainly did not like to see and went against my thesis of basically, things aren't as bad out there as people think. But when I looked into it a little bit more, you start seeing, okay, Walmart's laying off some corporate workers. Like, okay, I don't know really how big of a, if that is indicative of the economy. If like Walmart's laying off like 10% of workers at stores across the country, like I'd be like, holy shit, all right, now we're in serious trouble. But if Walmart wants to lay off a few corporate workers, try to help fix its margins, then I don't know. I mean, I'm not trying to spin that into saying, okay, that's not a big deal. I think it is. And again, that goes against my thing of saying, if Walmart's laying people off. Easy Mike talking about Sega. Yeah, let's talk about some of these different Monkey Pox plays. We did get finally President Biden yesterday announcing Monkey Pox as a national health emergency, I believe. So Sega is one of these stocks. It also reported earnings, but it's a pharmaceutical company. The company's lead product is T-Pox, an orally administered antiviral drug for the treatment of human smallpox disease. So it sounds like, Sega has a drug already for smallpox. I don't know how similar monkeypox is to smallpox. Sounds the same. You still got pox there. So Sega obviously getting a bounce here, not just from the monkeypox news, but also from earnings. Q2 sales were up year over year. So yeah, you've got multiple positive catalysts happening for Sega right here. You can see this stock's just been on an incredible run from the end of May at around 750 to now up above $23. So that's about a 200% increase in about a couple months. So GOVX, another monkeypox stock we've been watching this week, not performing as well as Sega. GOVX also reported this week, but doesn't look like the report was as strong. But still, this stock you can see getting that obvious lift from monkeypox. See in the chat what else everyone is watching. Apparently Americans coming up to Canada to get a shot, George is saying. Constitution of Axiom saying Walmart laying off corporate employees is huge. These are things you do to keep from going bankrupt or insolvent. It's a sign of something way deeper we won't see until Red October. I don't disagree that it's huge. Maybe I do. I don't know if huge is the right word. I think it's noteworthy that Walmart's laying off corporate employees. But right there, Constitution of Axioms, saying that Walmart is doing it to avoid bankruptcy. Like, I don't think Walmart is really in any trouble of going bankrupt. I think it's more so probably in line with Target and Walmart have come out and said the consumer behavior has changed. Walmart is in a position where it's really worried about going bankrupt right here. But again, I the reason I'm bringing it up is because it is noteworthy, and that's what I've been saying is that would be one of those parameters. Seeing UPS, seeing FedEx lay off drivers or Walmart lay off employees would be a sign that, okay, maybe the real economy, not just crypto, not just high growth tech, is actually slowing down. So we'll see. I'm not really, saying I think one way or the other. I do think, from all that we can tell, the economy is doing okay right now. I'm not saying it's amazing. I'm not saying it's great, but it's doing okay. And when you're looking at the data historically, in times where we're raising interest rates, stocks actually usually tend to go up because we're typically raising interest rates in an environment where you have growth at the same time. And so that's why it's not necessarily like a bad thing to raise rates, because it's a sign that the economy is growing, it's healthy. You want to kind of gradually raise rates with a growing economy. So I don't really see it as something as cut and dry as, okay, the Fed's going to keep raising rates, I can't be invested in stocks. Historically, that would be incorrect. There's been, historically, as we've risen rates, stocks have also gone up. Global Blood Therapeutics. This kind of sounds like Todos medicine we had on. Global Blood Therapeutics operates in the healthcare sector of the United States. It discovers and develops novel therapeutics to address blood-based disorders. GBT440, its lead drug candidate, targets the underlying mechanism of red blood cell sickling, which provides the potential to treat sickle cell disease. GBT440, an oral once-daily therapy, assists abnormal hemoglobin polymerization. Polymerization. Someone help me there. the underlying mechanism of RBC cycling. In addition, the company is engaged in other research and development activities targeted at hereditary angioedema and owns exclusively licensed rights to its portfolio of product candidates in the U.S., Europe, and other major markets. Sounds good to me, man. I listened to most of it, Sheikah Maniac. I didn't listen to every single word. I was getting some data and some things prepared for the show today. But I mean, yeah, let's check out the news here on Benzinga Pro. GBT shares resumed trading 46% after a report of bid from Pfizer. Pfizer in advanced talks to buy global Therapeutics. So yeah, I mean, it looks like a buyout here from Pfizer. I don't know. I don't see any share prices of what that buyout would be at, but it looks like the stock spiked up above $73. So that would indicate to me that maybe that buyout price is around there, around 75 or so, because I doubt people on the market are really paying much over whatever that share price would be on the buyout. But yeah, I mean, I think with the biotech space, and let's pull up what's the biotech ETF we can look at, XBI. With how beaten up this thing has gotten over the past couple years, really you got to run up during COVID, but since February 2021, this thing's just been on a complete downtrend. Kind of got that double bottom here at $60 up to 90 here, but you got to imagine with a lot of these valuations of these different biotech companies getting just smashed and getting diminished, that they do become potential buyout targets for companies like Pfizer, for your massive companies in the space, because you have your Eli Lilly's, your Pfizer's, your Merck's, and then you have all your smaller guys, your smaller kind of more pre-revenue biotech companies that are doing drug discovery, that have drugs in the pipeline, and those are your true kind of risky biotech plays. It doesn't sound like GBT is one of those. It sounds like it's a legit company that has revenue and all that, because they're getting bought out by Pfizer. $3 billion market cap, but let's see if we can try to find any. I'm still not seeing a share price on here. Let me go to Twitter, see if people are speculating there. What up, Nick? Shout out Nick in the chat. Trading Grounds. What up? What up? How's everyone doing today? Let me know in the chat what stocks you guys are watching. I saw some folks talking about Tesla. We'll check out Tesla real quick. We'll go to ADPN as well. APDN, Applied DNA. This thing, I mean, has just been running since really the past week or so with Monkey Pox, going from, what is this, 78 cents a share down here up to 630. Who's been trading APDN? On an absolute tear. Tesla, how's Tesla doing today? Wow, down 5%. Any news here? No. I don't see any news on Tesla, just down 5%. Blackstone right around $100, down 2%. Trading Grounds looking at VLON. Let's check that out. Low float. Valen Pharmaceuticals. Wow, 40-cent stock. I mean, hey, if it's a low float, you buy a couple of shares, people on social media pick this up and start getting it running. I don't hate it. 40 cents. I'm going to buy a few hundred shares with you. Mr. Wheelie Man. Hello, Aaron. This is my second day on your show. Can you please analyze BAC, Bank of America? I do disclosure. This is my bank, so keep that in mind. I'm not really, I don't have any, I don't feel super loyal to it or anything. It's just the bank I use. Probably a pain to switch at this point. I mean, look, Mr. Wheelie, I think right here with Bank of America, there are a lot of other stocks like this out there. It really is as simple as if you think we're heading toward a recession, maybe stay off. If you don't, then buy it. right? We know banks benefit from rising interest rates. It looks like, from what we can tell, interest rates are going to continue to rise. I know there are certain problems just in the financial space in general right now, kind of dragging these names down. You look at a name like J.P. Morgan, down from its highs of 172 down at 115. Hasn't really, these financial names, if you look at the XLF, haven't really participated in this rally that we've got in the past few weeks. I mean, XLF, yeah, we've come up from 30 to 33, so a nice little 10% increase there. But that doesn't really match what we've seen in the overall market or with, you know, tech specifically or NASDAQ. So, I mean, yeah, I don't mind adding some Bank of America here, right? You're getting a stock that's pretty cheap, forward PE at 10. I think you've got a nice dividend, yeah, 2.6%. So I don't hate it. I don't hate these financial names down here. You can look from a chart perspective. I don't know, Mr. Wheelie, kind of like time frame wise, if you're looking at Bank of America as a potential investment, if you're looking at it for a potential swing trade, but you do have some strength here. You know, you've got some consolidation here. It looks like, you know, we could potentially try to fill this gap up to 37. And if you were just going to buy this and hold it, you can always put a stop loss down here at our lows of $30 and know, okay, if we drop below 30, we're probably going to keep going lower from there. But if we stay up here, I mean, I don't mind that at all. I'm actually interested in looking at Bank of America now because, you know, one of those names that I feel pretty confident isn't going anywhere, right? I mean, like I said, I use Bank of America. I'm happy with it. Bank of America has a lot of customers, not going anywhere. And the stock's down. Stock's down from its highs of $50 to 33. Let's do some quick math. Down, you're down 31% from your highs on Bank of America. So yeah, Mr. Willie Man saying, actually see it drop before going up. Yeah, I mean, looking at the chart, like I wouldn't be surprised to see come back down here, maybe test these lows at 30 again. I mean, I'm talking more long term. I think I wouldn't mind buying some Bank of America at $33 and holding it for, you know, a few years. I'd feel very confident, actually, that if I bought Bank of America here at $33 a share, $34 a share, that in 5 years, it's going to be, the stock's going to be higher than $34 a share. I feel pretty confidently in that. Trading Ground saying Tesla has literally $1 million of new calls open today. Not advice, just watching the flow. Yeah, and that doesn't really surprise me. I think because, like I said, when I was talking about the Qs or on the overall market, like I see this as a potential day to buy into strength on a red day. And so, you know, Tesla has been incredibly strong. You can see on the chart here from going back into mid-July, just in the past less than a month or so, the stock has gone from 675 up to 940. Stock's gone up like 20% in a couple weeks. So it doesn't surprise me, A, to see the stock have a nice day, have a day like this where the stock's down 5% or so, right? You're not going to go straight up forever. But it also doesn't surprise me that a lot of people are coming in and buying calls with the stock down 5% because they see this as a stock that's in an uptrend, a stock that has strength and an opportunity to buy some calls on a day where the stock's down. And I was very much, while we were going down, I was in the camp of kind of thinking, okay, we're going to have to see Tesla like get down to realistic valuations before we see capitulation and the market crash. And now it kind of flipped, and now it's kind of the other way where I think maybe you need to see Tesla really go crazy here before we see the next downturn in the market. I wouldn't be surprised if in the next month we see Tesla get back up to all-time highs. But I do think Tesla, I mean, it is probably going to be dependent on what the Qs and what the overall markets are doing. But yeah, I mean, come on, guys. I mean, the market's down today on news that we added more jobs, that the economy's good. So I get it, right? The Fed is more likely to increase rates, and then the Fed increases rates. And if the economy is still not showing signs of a true recession, I still want to be a buyer. I still want to be a bull. Basically, that's the only time I would not want to be continuously adding to my investments, right? Every 2 weeks when I get my paycheck, a certain percentage of that goes straight to my Roth IRA, and I'm adding stocks to my long-term portfolio. The only time I wouldn't want to do that is if I thought, okay, we are really going to head toward a year, 2 year, 3 year long recession here. But you can handpick, cherry pick data all you want to help corroborate that argument. But until I start seeing compelling evidence that, okay, we're not adding jobs anymore, we're seeing all these things that truly indicate a full recession, that's when I would maybe slow down some of those contributions. But not right now. Not right now when people don't really know. Easy Mike looking at Oatly and Beyond Meat. We can check those out as well. I think Beyond Meat just reported. Didn't Beyond Meat report yesterday? Oh wow, up 21%. Yeah, and I think we talked about Beyond on the show, and I was like, look, why would you want to buy puts on a stock that's already gone from 200 down to 30? The stock's already down 80%, right? Like, if you wanted to buy puts, you should have been doing that a while ago. I said there was more alpha in playing this to the long side on earnings, and of course I didn't. But if I were going to, I would have played on the long side. So, Oatly, that's a name I haven't really checked out. I know. Was this a SPAC? I know there was some short reports on this one when it went public, just because I think oat milk, or at least the Oatly oat milk, is actually super unhealthy for you. Like, they said it has like the same amount of sugar in a cup of Oatly oat milk as in like a can of Coke. It's just like a different type of sugar, and they market it a little bit differently. So I don't know. I mean, I've never touched Oatly stock. I've traded Beyond Meat stock before, just during COVID. It was one of those kind of crazy movers. Right, you'd have it moving 10% a day, up and down. Jonathan's still short Apple. I saw Mitch in the chat saying we had a news headline on Apple earlier. I checked in Benzinga Pro. Looked like we had a couple different ones, so I didn't know which one he was referring to. Let's go through here in Benzinga Pro and see exactly which headlines we have. Apple asks suppliers to relabel shipments from Taiwan to China to avoid scrutiny. Okay, so it sounds like that might be the news that Mitch was talking about, some potential shipments, China thing. Yeah, I don't know. Again, I mean, I don't like. I just think it'd be hard to see any huge implications fall out from this China China Taiwan thing until we see it. Easy Mike talking about Irobot, another buyout deal today. Amazon announced plans to purchase Irobot. Let's see what so $61 per share, currently trading at $59.60. So I don't know. I mean, if you want to try to buy this to get $1 per share, $1.40 per share out of it, sure. I don't think there's really much really much reason to be trying to play that arbitrage. But I mean Amazon's Amazon. I don't think Amazon's going to have any trouble kind of getting this deal done. I think there are other companies out there making a robot vacuum, so I don't think there would be any antitrust issues. So Jonathan wants me to take a look at the SPX Weekly Chart. So what's SPY? What is? I mean, I've never understood the difference between SPX and SPY. SPY Weekly Chart should look similar to the SPX, correct? What is so crazy to you on this chart, Jonathan? This weekly candle is kind of crazy. 4.28% for the SPY. You barely ever see weeks like that. I guess we had this one, 5.8. That was a crazy week. I actually remember that one. March 2020. March 2022. A couple months ago. The cat uses yours, Easy Mike. Yeah, I've never had one. I actually think they're pretty cool, and I think they do a decent job. The EMA line. $50 EMA. All right, let me get that up. Indicators. I don't know. I'm not really a technical wizard, so I don't know what to think here. But yeah, I mean, I don't know. I just want to keep seeing the stocks green. Let's see other big news we had on the day. And as always, let me know in the chat. As always, let me know in the chat what stocks you guys are watching. Sorry, guys, just catching up on the chat here. Easy Mike saying, why are cybersecurity stocks? It's a good question. What's the cyber? Well, I'm seeing the cyber ETF up today, actually. Let's go to a daily chart here. First Trust, NASDAQ, cybersecurity ETF. FTNT, Fortinet's down about 1%. Let's look. I haven't checked out Fortinet stock in a while. Because this thing was on one of the most incredible runs I'd ever seen from November 2020 to about August 2021. It was literally just going up every single day. I mean, look at this chart. It's beautiful. No big downturns. You had a couple kind of rocky spots, but just going up basically the whole day or the whole time. Did they do a split or something? I thought Fortinet stock was more expensive. Did they do like a 4-for-1 split? I thought it got up to a like $200 something dollar stock. But yeah, I mean, this chart kind of looks ugly, to be honest with you guys. Right? You have, like, I wouldn't be surprised to see this keep coming down. Test these levels, $42. Again, I'm no chart wizard, so don't take what I have to say on the charts, you know, for gospel. AMC's up 5%. I mean, yeah. I think too. You have the news this week with HBO shutting down its streaming service. You have all these things. Batgirl, the movie Batgirl getting shelved. I think all these things could be positive catalysts for AMC going forward. Right? You know, we get more and more superhero movies, get more people in the theaters. Where we're going to keep increasing the prices of foods in the theater to the point where eventually, you know, a bucket of popcorn will be $35. You got to imagine that's going to be good for AMC's bottom line. So you know what? You gotta give it to the apes here. You got to give credit where credit's due. $19.50 for AMC. It sounds like a screaming deal, especially when you consider that this was a $72 stock not all that long ago. So if you're looking, you know, I don't think it matters whether you're a growth investor, whether you're a value investor. You know, this thing checks all the boxes. I don't see any feasible way this thing, you know, ends up dipping below. This is not investment advice, by the way. But yeah, I mean, AMC stock, like I said, $72. You're telling me you can buy something that's worth $72 for $19. That's a great deal. From a chart perspective, you got this little swing up. All you got to do is swing back up. Target $35 as your price target. I'd say go back out and ape that all. Yeah, I mean, but in all honesty, no, I mean, I've been hands off on AMC. It honestly looks like from a chart perspective, this thing can run. But I mean, AMC, if you're buying it up here at $19, you're buying a stock that's probably still overvalued a little bit. And if you're doing it just for speculation that you think it's going to go up higher, great, fine. You know, buy it thinking, okay, this could go up, this could keep going up a little bit, and I can sell it and make some money. If you think, you know, you're going to buy it and hold it forever, and this thing's going to grow and the business is going to be amazing, I don't really know what to tell you. I would just look at it as a trading vehicle. Look at it as a speculative asset, a way to potentially make some money or lose some money, whatever you're trying to do. Adam saying, I hope we have no first time listeners. Yeah, I was kind of being sarcastic talking about AMC there. AO saying slightly more shares. What do you mean? I should buy more shares at AMC? Ed G wants me to check out CPS, Child Protective Services. Copper Standard. Oh, holy cow. Up 84% on the day. Wow. I'm checking out Southern Copper. This is, if you guys remember, I was trading this stock a couple weeks ago. My good buddy, Mr. Joe over at Bloomberg on the Odd Lots podcast, they put out a good podcast about copper and just about how important copper will be going forward for our, for basically for everything, whether you're talking about EVs, whether you're talking about clean energy, whether you're talking about just industrial production in general. Copper is going to be very crucial going forward. And so basically, a lot of people think, all right, if you start loading up on some copper names now, in 10 years or so, you'll be very happy you did so. But this Southern Copper chart, which to me was like the biggest copper name I could kind of find, is pretty ugly. The chart is, and you can, really see commodities have just gotten crushed over the past couple months as maybe inflation's cooling down. You have these super elevated commodity prices maybe start finally coming down. You can see that reflected in Southern Copper's stock. And then also you have the aspect of people kind of rushing to commodities and miners in recessionary times because they see them as safer than other stocks. But what we've had here is now people potentially maybe rushing out of it as recession fears have subsided. So people saying, okay, we bought this miner because we were worried we're going to run in a recession. And now you're seeing gas prices come down and all these other stocks going up. And you're like, why the hell am I in this miner, this safe stock? I need to sell this and get back into some of these other stocks. So multiple aspects there kind of moving this copper name lower. What was the ticker on the other one we were just looking at? CPS. Copper Standard Holdings up 80%. Let's check out the news in the news feed. Copper Standard skyrockets after positive outlooks brings buyers back. Shit, we've had some good earnings reports. I don't know if I've ever seen a stock up 80% on earnings. There's probably been a lot of cases of stocks going up. There's probably been cases of smaller stocks going up like hundreds of percent after earnings, but I don't remember many stocks, at least in recent memory, going up 80% after earnings. Market cap. Wait, what? Something seems off here. Market cap 85 million. But they have almost $1 billion of debt. I'm gonna need to do some investigating on here because it looks like some of these financial. Oh, it's probably because of the. I don't know. I'll have to do some looking into some of these numbers because something looks off here. Another kind of industry I've been watching, just clean energy. You have these different catalysts with the bill going through the House and the Senate. One of my favorite clean energy names, Sunrun, been on a good run here. No pun intended. And from a chart perspective, I'm really looking for this thing to continue. We've cleared some of these previous resistance levels right here at $30 and then right here again at 33, or we're kind of at this important resistance level right here. And if we break up above here and give me maybe, $35, $36, it looks like this thing certainly has room to run into the 40s. So Sunrun's been a name on the top of my list that I've been looking at, that I've been trading. Of course, all the biggest names as well. Apple, I think, is setting up for a very interesting trade here because right now, today you're down, almost 1%, but it doesn't look like you have anything slowing down Apple until we get to this, basically your previous all-time high level. So I'm going to keep buying, long Apple plays on days like this where we're down and just hope that trend continues. And then maybe when we run into our previous highs, play for some sort of reversal there. I just got in. Why is BBIG stopped? Any news? I don't know. Let's check it out. First I've heard of this. BBIG is stopped. Let's go to 5-minute chart. I have no clue, man. NASDAQ halts Vinco Ventures. NASDAQ announced that trading was halted in Vinco Ventures, BBIG at 144. Wait. I'm so confused. Oh, this was yesterday, bro. That was yesterday. That BBIG was halted. I don't think it's halted right now. Or maybe it halted yet, or maybe it stopped trading yesterday and still hasn't resumed trading. Yeah, that's what happened. This is the chart from yesterday at I don't know. It sounds like the company, I don't know, maybe they're going bankrupt. I have no clue. Let's see. Sorry, I'm reading an article right now. I'm trying to get to one. Vinco Venture, BBIG stock alert. Vinco's co-CEO threatens NASDAQ non-compliance. Vinco Venture stock is in the spotlight today after a Form 8K revealed that the recent appointment of John Colucci to interim co-CEO is non-compliant with NASDAQ listing requirements. The company also announced that former CEO Lisa King stepped down earlier this month. Meanwhile, the board appointed Theodore Farnsworth as co-CEO on July 14th. NASDAQ requires the board of any company be comprised of a majority of independent directors. A director who is independent should not serve on the executive team or be involved with day-to-day operations. All right, so let's read that one more time. NASDAQ requires the board of any company to be comprised of a majority of independent directors. A director who is independent should not serve on the executive team or be involved with day-to-day operations. As a result of Colucci's appointment, Vinco's board now consists of a majority of non-independent directors. The company is well aware of this and notified the NASDAQ of its non-compliance on July 22nd. How does Vinco plan to alleviate the non-compliance? Let's get into the details. This is all coming from investorplace.com, by the way. Colucci appointment is non-compliant with NASDAQ requirements. To rectify the non-compliance, the chairman first recommended that Colucci step down as director immediately for the next 60 days. The board agreed to replace the vacant director seat within the next 30 days as well. In the meantime, Colucci will focus on financial and operational aspects of the company. Farnsworth will focus on both public and investor relations. While Colucci's compensation remains undecided, Farnsworth will forego all compensation. So our good friend Ted Farnsworth has been on the show before. Usually not good, Dean. This doesn't sound good. Under investigation. I don't know. I mean, I don't know. I guess you can't sell right now. Shares are halted. That's a pain. That sucks. All right, other top headlines of the day. Going through our top headline or our top articles from Benzinga today. Top headline is still about Walmart getting smoked after layoff announcements. Let's go back to Walmart's chart real quick. And again, I mean, I don't want to sound like a broken record, but it's kind of like with the energy stocks. Like if you think we're not heading toward a recession, then you have an opportunity to buy Walmart stock well off of its highs of 160 down at 125. So Walmart is still from 165 from its all-time highs to where it is now is still down more than 20%. If you think we're not heading toward a recession, then Walmart's going to be fine. Walmart's still going to make money. They might have a couple of rocky quarters where they're, talking about their inventory and the consumer behavior after COVID is looking different. But if you think we're not heading toward a recession, then buying Walmart at 125, down 20% from its highs, is a great discount and a great deal. And you can just buy it and hold it. I don't know. I don't think Walmart pays an incredible dividend, but it's probably decent. Yeah, 1.8%. So Walmart's one of those stocks that if you just buy and hold in your long-term investment accounts, that you're not only hopefully going to get some appreciation of the stock, you're also going to get paid out on a dividend every quarter, and you can reinvest that in Walmart and reinvest it in different stocks, or just put the cash in your pocket. But to me, I mean, right now, while we've had this big dip, when I've been looking at names to add, While I've been looking at things to add, I want to add names that I know are companies that are A, already making money, already profitable, B, established names that I know are going to be around for a while. Why? Because I want to take that opportunity to buy established names at a discount, right? If you're looking at a name like Walmart that is typically going to appreciate, if you say in line with the S&P average, about 10% a year, the stock, maybe a little less than, if you want to say with Walmart, 7-8%, okay. But now you're already buying it down 20%. That's going to increase your returns. So buying names like Walmart, buying names like Target right now that are down still from their all-time highs. I mean, even names like Lululemon to me are really interesting because it's not as easy as just saying, okay, this stock is down, so I want to buy it. But it's what stocks are in a position. It's all about forward return, right? We look at charts. Every time we look at a stock, we're looking at what it's done in the past. But when you're investing, when you're buying, you really care about what the stock's going to do in the future. And I like names like Lululemon, like Walmart, like Target, that are established names that have brand loyalty, that right now are still trading at a discount. I mean, even Apple. Apple is way, 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 way higher from its or way closer to its previous highs than a stock like Walmart or Lulu is. I mean, from Apple's all-time highs, we're down less than 8%. Apple's basically at its all-time highs. But a name like Lulu? No, this thing was 480 down to 315. I mean, let's see what the depreciation is down there. 33%. Costco looks better, George is saying. CPS next leg, AG. Let's go back to our copper play. CPS up 82%. Again, this is on earnings. We do have different buyout news today. Irobot getting acquired by Amazon, up 20%. That takeover price is $61 a share. So $59 right now. Not really a lot of alpha there if you're trying to play for that arbitrage, but $61 your buyout price for Irobot. So getting a nice little increase today, up about 20%. Going over back to Southern Copper. Southern Copper, we got people talking about copper in the chat. CPS, of course. Going back to Walmart. Guys, looking at the chart, I wouldn't be surprised to see Walmart come down a little bit further in the next couple, days or week or so. But right here, like right about the 120 level, I would just purchase it. Like this is probably what I'm gonna do. And again, this is not investment advice. Just buy some of the stock, put a stop loss at these lows that we've tested not once but twice. Right, the one right here below 120, 118, 119 level. And then, you can buy it, put that stop loss. If we run through the previous lows, probably going to keep going lower. But then you can just hold Walmart stock. And then, if we keep getting jobs numbers like we did today and the economic data looks good, Walmart stock is going to appreciate. Walmart stock is going to go up in that scenario, in the scenario that the economy is fine and people are spending money. And then, of course, if inflation starts coming down, you get people, the consumer sentiment, which everyone likes looking at that report coming from University of Michigan. You start getting that coming up higher. I wouldn't be surprised to see Walmart back at all-time highs within the next year. 125 to 160. I mean, and plus too, I do like, and when we're talking about Walmart, we're talking about it as a value play, obviously, but Walmart is doing some interesting things as a company, trying to cut into, like something like Amazon's market share. Walmart has put a lot of effort in becoming, really a good place to go to for groceries, not just like electronics and clothes and household items. A lot more people are doing their grocery shopping at Walmart now than 10 years ago. And if you look at something like the Walmart app that is now offering grocery delivery service, think about it. I mean, for a majority of Americans, if your best delivery grocery service is between Amazon and Whole Foods and Walmart's is most likely going to be a lot more affordable. And with what people know too, right? If you want your favorite brands, right? Your kids are used to getting, Frosted Flakes. you can get that from Walmart. I don't think you can get Frosted Flakes from Whole Foods, right? Whole Foods has all their own different brands, different healthy things. People like the brands they are loyal to. Walmart delivers those brands to the people, and Walmart is one of those brands that people are loyal to and that people trust. So I do think, and this again is on the thesis that there's been a lot of recession fears out there. There's been a lot of data that says we're not really maybe heading toward a recession. Maybe we're fine. And in that scenario, in the scenario that the economy is doing okay, I'm not saying it's amazing. I'm not saying we're in the most booming, it's not the 1980s and we're in the, best economy we've ever seen or anything, or 90s, or I don't know when that was. But we're doing okay, it seems like. Jobs reports look good. Inflation coming down. Walmart is at its 50-day moving average below 200. Costco looks better. All right, so let's check out Costco, because that same thesis should stick with Costco. And that's where I do like looking at charts, is if you have a thesis like the one I'm talking about right now, where, okay, these names are beaten down because there's been fears of a recession. And fears on top of the recession, just that margins and profits may not be as good in the next couple quarters as inventory, you run into some inventory struggles from post-COVID. This is where I like charts, because if you have this thesis that these names are down for recession fears, but I don't think we're really going to see a recession, so I should be looking at these names, then, you can put all these companies in a basket, Costco, Walmart, Target, and then I can look at the charts and decide which one looks best, which one's giving me the best entry point. That's where I think charts, at least for myself, like I'll utilize charts when you have an investment idea, or maybe you want to get in on a stock that you really like, and then you can look at the chart to just maybe help you get a good entry point, or help you determine maybe I really like this stock right now, but obviously everyone does because it's overextended and the RSI is 85. I'm going to be patient here, or maybe instead of buying $100 of it, I'm going to buy $10 of it now and then wait for it to maybe come down. I don't really like to let charts completely determine if I'm going to buy or sell a stock. I like to use them to aid my decision process. So Costco, we just ran the numbers with Walmart. I believe we said Walmart was down, Let me do it again real quick, so I don't want to give you guys bad info. So Walmart's still down about 20% from its highs. Costco looks like it's a little bit closer to its previous high still, which is actually a good sign if you were looking to go long one of these. So Walmart's down 20% from its highs. Costco's only down 10%. So if you were going to go long one of these and you wanted to go long Costco, you could view that as actually a good sign that it's closer to its previous all-time highs, that investors are willing to buy this more on the dips, that people feel better about Costco's business going forward. I don't know. I haven't, done a deep dive or done my due diligence on Walmart and Costco to know exactly why the market's saying Costco's in a better position than Walmart right now. I will say I think that same idea holds true, that if you think we're not heading toward a full-blown recession right now, that Costco stock should do well, that it should hold up. And to George's point, maybe there's some metrics on the charts, some different technical measures that indicate that Costco might be in a stronger position right now. But I think either way, I think if you want to buy Costco, you want to buy Walmart, I think they're both probably going to behave pretty similarly. They're both going to pay you a little dividend. I don't know. I mean, I don't think you could really go wrong with either of them right now. Costco's bigly on gas, great value, baby. And I honestly, value right now has not been getting a lot of love, right? When we pull up Burke B's chart, go to a daily on here. Right before we had this, in March, Burke B was making all-time highs, was just grinding higher, was on a great run. And it's certainly, Burke B, we're looking at the daily chart here, has participated in this little rally we've had since late June. But if we look at Burke B's stock, let's do some quick math here. From its lows in June to now, Burke B stock has gone up 8.74%. So we'll call it 9%. So Burke B stock has gone up 9% in the last 6 weeks or so. We'll compare that to the Qs. 9% on Burke B from the same day in June. The Qs are up 18%. So double what Berk B is up, the Qs are. So that's showing that there's been strength over the past 6 weeks in tech, in growth. And we can see that, checking ARK, right? ARK from its that same June level, right? Like June right here, $36 to $50. I don't know. That's probably at least, let's just check real quick. From June 20th to now, 34% ARK is up. So the strength has been in growth, in tech. And to me, that's telling me that there's actually some good opportunity here in value. Why? Because a lot of these companies in Berk B, a lot of the value companies we're going to be talking about, whether you're talking about energy companies, whether you're talking about Chevron, Exxon, Walmart, Target, all these different value names for the most part are companies that aren't, they don't have some, like ARK has a lot of companies, for example, like Roku, Teladoc, Tesla, that have these different portions of their company that are expected to grow a lot down the road, right? Tesla is expected to be a lot bigger of a company than it is 10 years from now. That's not really what investors are looking for in some of these different value names. Investors are looking for Walmart to churn out quarter after quarter of making good money and having a lot of cash and being able to pay a dividend. And so if you have these value names that have been beaten down kind of, and you're looking at Berkshire here, and that the Berkshire Hathaway, and that the companies are going to be doing okay, that we're not going to see a recession, then all of these value companies, your Walmarts, your gas companies, should be making money hand over fist and should be doing really well. And there's actually an argument to be made that in certain times of recession, you actually do want to allocate some more money toward growth, because it's like, all right, if the value companies that their job is supposed to be to make money and to pay these dividends, if they're not doing well, if they're not making money, if they're not producing good quarters, you might as well go with the growth stocks at that point. So I mean, look, strong economy. I want to buy the companies that are printing cash, are doing well. Speaking of growth, I want to just pull up Rivian stock right here. We've been hearing a lot about Rivian. I mean, this thing, if we're looking at stocks that have made great runs off their lows, Rivian is one of them. If we're going to zoom in here, you can see here in May, this thing got down to around 20 bucks. And this is where I pointed out on the show that Rivian at one point, there was a certain day where Rivian's market cap was actually trading below its cash on hand. Its market cap at one point was trading at, like, I want to say $18 billion, and it had $18 billion of cash on hand. Only about 16.5 right now. Looks like Rivian spent some money. But still, you have $16 billion of cash, market cap of just double that. So, it's not cheap. It's certainly very expensive here, Rivian, right now. But it did get to a point where, from a value standpoint, was like, holy cow, this thing has gotten like super cheap. And now the stocks has performed nicely since then. I don't know, as far as other EV names go, that you're going to put in the same category as Rivian. These ones that aren't really producing a lot of cars yet, but down the road are expected to grow a lot. Your Fiskars, your Rivians, your Lucid Motors. I just think they're also early stage, that it's very hard to tell which ones are going to be able to actually have decent market share, have a footing in the industry. What I will say is I do really like what some of these more established companies are doing on the EV front. Your Volkswagens, I've talked about this a lot. With what Volkswagen, with what Mercedes are doing on the EV space. I mean, even like Toyota, who owns and operates Lexus. As Toyota starts putting out all electric Lexuses that look really good, and that are luxury vehicles that are probably in the same price range as Teslas, it's just giving people more options. So I think if I'm going to make any bets on the EV market at this point, I want to go with some of these more established car companies that are investing in the EV space. Volkswagen is probably my favorite in that sense, just because I do think the Audi line of luxury EV vehicles is very strong. I've been seeing a lot of those on the road. And also, and I've talked about this before too, Volkswagen is an investor or partial owner of Electrify America, which looks to be one of the leaders in, the charge stations, right? As EVs grows, we're going to see a lot more charging stations or charging charging blocks at gas stations, and Electrify America looks to be one of, if not the leader in that. ChargePoint, of course, you've got ChargePoint, you've got Plug Power, you've got these different names, but I don't know. I'm curious what the chat thinks. Yeah, GBT getting acquired. We looked at that. Pfizer given the deal. I don't know if we've gotten a share price yet for this. Let's see. Let's go into the overview. Yeah, I still don't think we've gotten a share price for what the buyout will be at. $5 billion. What's the market cap right now for GBT? It's probably close to that with how much the stock's gone up. I mean, it was $3 billion today before the 38%. Before the stock went up 38%. So I don't know what it is now. We could do that quick math and figure it out. Companies, stocks trading below cash with low cash burns, some value as possible acquisition targets. Yeah, 100% Beach Bum. If you've got any names like that that check all those boxes that you want to check out, 100%, let's do it. Yeah, I mean, to me, just because I listened to that podcast, the Odd Lots one talking about copper, it's one of those things that like piqued my interest and it's like, oh, I've never thought about that, or like why copper could be such a great investment going forward. But it's also not one where I've literally all I've done is listen to that podcast. I haven't like gone out and really researched different copper names, researched the copper industry. Sounds like there's a lot of money to be made there. Yeah, George, I think the electric Audis look good too. I was very surprised. I was actually about a year ago, before I got the car that I have now, shopping for cars and going to different dealerships and whatnot, and was very, very pleasantly surprised with the electric Audis. Was just like, wow, like these things are freaking cool. I was like, I thought only Tesla had electric SUVs on the road right now, and the guy's like, no, we've got, this Audi Q5 or Audi e-tron all electric. Easy Mike, Beach Bum, George K, what up? Hope everyone's got a fun weekend plan. Let me know in the chat if you guys got any fun weekend plans. CLF, Cleveland Cliffs. This is one of our favorite stocks to check out on Get Technical. Speaking of Get Technical, it does look like you've got a nice little rounding bottom here. On Get Technical, we were always looking for those nice, juicy round bottoms. I mean, look, from a chart perspective, because I don't know, I know what Cleveland Cliffs does. Steel company, right? Flat rolled steel producer. Yep. Right. Point for me for knowing what Cleveland Cliffs does. I just don't know enough about like what's going on in that world right now to know from like a news standpoint, from a catalyst standpoint, if I'm interested in it. But from a chart perspective, this thing does look very interesting because you've got that round and bottom. Typically, when you see this pattern, you'll see it keep coming up at least to this level, which would bring us to $23 on Cleveland Cliffs. So, in honor of Get Technical, in honor of Neil, in honor of this nice juicy bottom, this looks like a rat snack. Does look like a rat snack indeed. Check out Array. I haven't checked out Array Technologies in a while. Man, I fucking nailed it on this one. I put this in my Roth under $10, and it's at 18 right now. Isn't it fun when the trade, like, when you buy something and it actually goes up? I wish that happened every time. You just drove by CLF today. Where is CLF? Oh, all right. That was a dumb question. That was a dumb question, guys. I apologize for that one. Obviously, Cleveland Cliffs is in Cleveland. I saw someone saying they were checking out the different fintech names, your Squares, your PayPals. I don't know. I'm a buyer down here. I don't really know what you guys want me to say. Like, shit. PayPal. I don't know. I mean, I'm sure. Here's what we need to do. I need to get. Yeah, I did say that. Pickle Jim. Play some Spice Girls for Neil. We could do that. I mean, I don't really. Again, like I think what I need to do is I need to get someone who's like bearish on PayPal on here to like explain to me why. Because I'm sure this company like has problems, has growth problems. Like otherwise, like there just wouldn't be any excuse for this thing still to be hanging out down here at $95. I don't know. Like I got to do some more research on PayPal to be honest with you, but I do. I think if I had to pick one between Square or Block or PayPal, I'd pick Block. I don't really know why exactly. I think I do like the payment operating systems like business model that Block has, where like you go into different small businesses, they have a little Square reader on the iPads. The problem is there are clear competitors in that now. You have like Toast. Is Toast a stock, by the way? Yeah, Toast is a stock. Cloud-based restaurant management software. So you have like Toast, you have other companies doing that too. So I don't know how big of that moat is for Square or for Block, sorry. Is Block ever going to change their ticker, by the way? Is there just going to be SQ and continue to be Block? Look, guys, I don't know where your guys' head's at. A juicy round bottom is simply on a stock chart. When you get a rounding, let's go back to Cleveland Cliffs because it's probably a little bit of a better example. It's just where you've got a stock that got beaten down, right? You've got this downtrend, and then you've got some consolidation, and you've got that nice little rounding out bottom pattern. We love that as traders because what usually happens on the right side of this is you end up filling that gap on the left side. Typically, of course, that's not going to happen 100% of the time. If it happened 100% of the time, we would simply just look for these and trade them every single time and be millionaires. But what typically happens if you're looking at charts and trading is when you get these nice consolidation patterns after this duration where the stock is kind of soaking, consolidating, just trading sideways, then it's followed by a leg up. Typically. 180% of the time, it works every time. Are most eBay payments made with PayPal? That is a great question. I do know that, PayPal has that integration on eBay. I know I personally don't use PayPal a lot, but one of my buddies who I think does a lot of online shopping is like, oh my God, I use it all the time. Like every place has PayPal checkout and you just link up your debit card to it and it makes it super easy. I don't know. I mean, I personally don't use it all that often. I think even if even if PayPal was the most used payment method on eBay, I don't know how impactful or how important that is for PayPal. Just because, I mean, I don't know, in terms of like volume, I would say eBay is not the biggest thing. It's probably more important like what people are used to pay on Amazon on different websites. But eBay, I don't even know how much traffic eBay does anymore. What is eBay's stock doing anymore? eBay had an opportunity to buy someone, I believe, at some point. They didn't. Maybe it was Amazon and they said no or something. Maybe they could have bought Craigslist. I don't know. eBay seems to me like one of those businesses that's just been kind of wrecked by bad leadership decisions. Because if you think about where it was in terms of the site in like the mid 2000s, it was literally, wow, this is a huge drop here from 30 to 13. I don't know what happened in May 2011, if this was just like one earnings day or what. Let me zoom in here. Holy cow, down 59%. Was this in a day? Was this like an earnings report or something? Does someone remember this? May 23rd, 2011? I was 14 years old. I don't remember. eBay is like if e-commerce. Oh, from like a stock standpoint? That's actually I actually love that comparison. Because Twitter and eBay both like historically have had a lot of users, like probably never really from a business standpoint. Like Twitter, I mean, I think comes right after Facebook in terms of if you're looking at in the heyday of social media. So we're talking post MySpace, right? Like Facebook was the biggest. Then Twitter came on the scene and was like really cool in like 2010, 2011, 2012. Like Twitter was the place to be, and Twitter's never really been able to capitalize on that. And I think you can say the same thing about eBay for e-commerce. Like even though eBay was one of the first and arguably the biggest at a certain time point, never really been able to capitalize. So I understand that comparison there. Yeah, and I think for me, like growing up, kind of when I grew up, like looking at eBay and Amazon, I've kind of held them in different, like eBay is where I'd go if I needed to buy something like used. Like I actually did buy a golf club off eBay recently. It wasn't even a used golf club. It was a new golf club. I think it was just old. Like some golf shop was selling last year's model on eBay for $200 instead of $300. But Amazon obviously doesn't. I don't know. Actually, Amazon does probably sell some used stuff, but like eBay is like buying you're buying goods that have been used or new goods and bid in, and you don't have that on Amazon. So I've always viewed them kind of differently. But I do think, and George is saying eBay was useful when Amazon only sold books. eBay is the only place can get some things the sellers trust, like PayPal. Yeah, I think eBay's. And eBay also, I mean, you got to talk about in the last year or so, they've made they've invested a lot of money in the shoe part of their business. They're trying to take on StockX and be able to say like, hey, if you want to buy and resell shoes, eBay is the place. I don't know if that's working out because I mean, StockX already kind of has that on lock. But all right, folks, that will be a wrap for us today. It is 12:59 on a Friday. So happy Friday, everybody. Hope everyone has a fun weekend planned. We'll be back on Monday. So guys, have a fun, safe weekend. Don't do anything I wouldn't do. Smash the like, subscribe to the channel if you haven't already. Follow me on Twitter. At AaronBree5. This is probably the most important thing you could do today. I'm at 710 followers. I'm gonna try to get that up to 1,000 by a certain point. I haven't picked a date yet, but we're trying to grow that number up to 1,000. So go ahead and follow me on Twitter, please, if you haven't already. Again, that will be a wrap for us today. I personally, I don't know if producer Rohan's out there. I don't know how to end the show today. We're doing things a little differently. So I don't know if we're still live right now or if the show's ended. Let me go check on YouTube. Oh, we are still live. Hey,